Can a crypto left for dead actually surge by 10 times before April? Welcome back to ICP Today. We are navigating the early weeks of 2026. And for the internet computer, the landscape appears incredibly harsh. Following one of the most brutal years in recent crypto memory, ICP is cemented as one of the very worst performers among the top 50 cryptocurrencies by market cap. It's a project struggling desperately just to maintain its footing above the $3 psychological level, far cry from its former heights. Yet, cutting through this pervasive gloom, we now have an astonishingly bold prediction issued directly from the project's founder, Dominic Williams. He isn't merely hinting at a modest recovery. He is projecting a potential tenfold explosion in value, and he's putting a startlingly near-term deadline on it, April. This is not just optimism, it's a declaration of imminent resurgence against all prevailing market evidence. This content is for educational purposes only. It does not constitute financial advice or endorse any investment or cryptocurrency. Information is based on publicly available sources. Always do your own research before making any financial decisions. So, the million-dollar question, or perhaps the tenfold question, is this: what could possibly justify such a radical claim when every single price chart is screaming a narrative of persistent failure and decline? That precise contradiction is the heart of the exhaustive deep dive we are launching into right now. We are going to dissect the technological advancements, parse the founder's latest provocative statements, take the temperature of the entire ecosystem, and then hold all of that up against the unforgiving reality check being delivered by the broader cryptocurrency market. This is about separating tangible signals from sheer noise, executable strategy from hopeful rhetoric. But before we plunge into the details, if you are new to this channel, make sure you hit that subscribe button and ring the notification bell. For our returning community, your ongoing support is what makes this deep analysis possible. Dropping a like on this video directly fuels the channel's growth and ensures we can continue delivering this level of researched content. Your engagement is the foundation of everything we do here at ICP Today. First, we must properly set the stage with some crucial context. We witnessed the emergence of the AI narrative, which many hoped would be ICP's salvation. We saw the much-anticipated launch of Caffeine AI, a tool designed to democratize development on the chain. And yet, critically, none of these technological milestones provided any lasting support for the ICP token price. In fact, we observed what many analysts labeled a classic, coordinated pump-and-dump event in the final months of 2025, a sharp, dramatic spike in price that was completely erased within weeks. That event served as a stark, undeniable confirmation that heavy whale manipulation and speculative games remain a dominant force influencing this asset's valuation, overshadowing fundamental progress. Therefore, as we find ourselves deeper into 2026, with the broader crypto market exhibiting a clear and sustained downtrend across almost every major asset, the foundational question for ICP becomes painfully simple. Why on earth would this project be any different now? What has fundamentally changed to insulate it from the systemic pressures crushing the rest of the sector? Dominic Williams' recent statements are his attempt to provide a powerful answer to that very question. He points not to price, but to a different kind of metric altogether: raw, unfiltered development activity. And on the surface, the data he cites is nothing short of extraordinary, seemingly defying the gloomy price action entirely. He recently stated, and this point is absolutely crucial, that in the month of December 2025, the Internet Computer Protocol attracted and engaged 4 times more unique active developers than the combined totals of Ethereum, Solana, and Sui. Let that sink in for a moment. 4 times more builders than 3 of the most vibrant and capitalized ecosystems in all of Web3 combined. That is a staggering, almost unbelievable figure. Dominic directly ties this developer explosion to the unique capabilities unlocked by Caffeine AI, suggesting that this platform's real, organic growth phase has not even properly begun. He hints at major new technological features scheduled for release in the immediate future, implying that what we are seeing is merely the prelude to a much larger wave of innovation. His rhetorical conclusion, posed to the community, is the source of our video today. Will we see a 10x April? But this is the precise moment where we, as critical analysts, must apply rigorous scrutiny and pause the hype train. 10 times what exactly? Is Dominic referring to a 10x increase in the developer count, which is already reportedly massive? Is he predicting a 10x leap in technological throughput or capability? Or, as is overwhelmingly the primary concern for every investor and viewer of this content, is he explicitly predicting a 10x appreciation in the market price of the ICP token itself? The statement is deliberately ambiguous, and that ambiguity is strategic. It allows hope to flourish. However, It also highlights the massive, often painful, and historically consistent disconnect between vibrant developer activity and tangible market success. A simple truth in this space is that building the most powerful, elegant engine does not, in any way, guarantee that anyone will actually show up to buy the car. Developer passion is the fuel for innovation, but user adoption and capital inflows are the wheels that make the vehicle move forward. To underscore this point, we need only glance back at recent crypto history. Other blockchain projects, most notably Cardano in previous cycles, have relentlessly touted their superior GitHub commit counts, their vast repositories of academic research, and their sprawling global developer communities for years on end. And yet, despite all that fervent building activity, they have consistently struggled to translate that technical passion into meaningful, large-scale adoption, practical utility, or sustained token valuation growth. The developer community is a necessary and vital ingredient for any protocol's long-term health. It is the lifeblood of innovation. But let's be unequivocally clear. It is not the final product that drives market cycles. Developer enthusiasm alone does not create demand for a token. Utility and usage do. So, if a surge in developer numbers isn't the definitive silver bullet that guarantees a price surge, then we must shift our focus to the actual product in the marketplace and its measurable traction. Here, Dominic has ignited another significant controversy. He has raised a forceful public objection to the way industry metrics, specifically total value locked or TVL, are calculated and reported for ICP. He claims with evident frustration that over $800 million in genuine value, assets locked within ICP's core governance, and staking systems like the network nervous system and service nervous systems is being deliberately and systematically excluded from popular tracking websites like DeFi Llama. In his view, this isn't just an oversight. It's a form of deliberate disinformation that actively harms the project's perception, and he insists it must be corrected immediately. I can understand the source of this frustration. Being omitted from major industry rankings creates a perception of irrelevance or failure, especially when you believe your protocol holds significant committed capital. However, from an analytical standpoint, this entire debate feels like a potential misallocation of precious energy and focus. The prevailing industry standard for calculating TVL, for better or worse, is specifically designed to measure assets that are locked within decentralized finance protocols for purposes like lending, borrowing, yield farming, or providing liquidity, not for base layer protocol staking, which is a different mechanism altogether. Even if ICP's full $800 million in staked value were magically added to DeFi Llama's totals tomorrow, it would likely just shift ICP a few positions up a list. It would not, in any fundamental way, solve the core challenges of driving real-world, everyday usage, fostering deep liquidity, or achieving seamless interoperability with the rest of the crypto financial system. Fighting for a higher spot on a ranking website is a distraction from the real battle for adoption. This debate naturally leads us directly to the single most critical issue, the true elephant in the room for the Internet-Computer Protocol: its profound lack of interoperability. Where are the robust, battle-tested, and liquid bridges connecting ICP to Ethereum or Solana? Where is the native, canonical integration of major stablecoins like USDC or USDT directly on the ICP ledger? Why is there no seamless, low-friction connection for ICP's canisters to interact with the sprawling, multi-billion-dollar DeFi ecosystems built on established players like Chainlink for oracles, Aave for lending, or Uniswap for decentralized exchange? These are not trivial questions. They are existential ones for any blockchain that aspires to mainstream relevance. A blockchain, irrespective of how technologically sophisticated or revolutionary its architecture may be, simply cannot thrive in a state of splendid isolation. Major financial institutions, enterprise partners, and even other crypto-native projects require these foundational on-ramps, off-ramps, and assurances of deep connectivity. To put it bluntly, a major global bank is not going to build mission-critical infrastructure on a technological island, no matter how advanced that island's internal systems might be. This persistent lack of deep, trustless integration with the wider crypto economy is arguably the single biggest anchor holding back both the practical adoption and the overall market perception of ICP. It represents a glaring gap between technological potential and market reality. Now, with that critical challenge clearly framed, let's examine some of the potential catalysts and positive developments that the ICP community is currently rallying around. A key and respected figure within the ecosystem recently highlighted a large, concentrated pocket of leveraged liquidity sitting around the $3.55 price level. This could indicate a critical technical zone where a significant short-term bounce or squeeze might occur, offering a glimmer of hope for a relief rally. However, this same concentration also signals a massive, looming liquidation risk. If that $3.55 support level decisively breaks, it could trigger a cascade of automatic selling, accelerating the downturn. On the governance and tokenomics front, there is Mission 70, a major community proposal designed to significantly reduce ICP's annual inflation rate. If passed, this could gradually tighten the supply side of the token economics, a fundamentally positive move for long-term holders. Furthermore, a new proposal for performance-based node rewards is being discussed, which aims to incentivize node providers to maintain optimal network health and reliability, thereby improving the overall efficiency and resilience of the Internet computer itself. Externally, the upcoming World Computer Day event, featuring collaborations with industry titans like NVIDIA and AMD, certainly has the potential to generate positive media buzz and rekindle interest in ICP's core compute narrative. But here is the cold, unvarnished truth that overrides all these individual data points. We are operating within a confirmed macro downtrend across the global risk asset spectrum, and cryptocurrency is leading the decline. In such an environment, attempting to force a sustained uptrend in a single, isolated asset often results in exactly the kind of pattern we witnessed last November: a fleeting, sharp, dead cat bounce, a classic pump and dump with no underlying sustenance. The market's tide is decisively going out, and this relentless ebb is revealing with brutal clarity which projects are swimming naked, which ones lack the fundamental utility and adoption to stay afloat when speculative capital retreats. For ICP, or for any crypto project hoping to emerge as a winner in the next major cycle, the strategic focus simply cannot be on short-term price prop-up schemes or public relations battles with data aggregator websites. That is a losing game. The absolute unwavering focus must be relentlessly directed toward the holy trinity of long-term success: genuine adoption, seamless integration, and demonstrable everyday utility. In the grueling crucible of a bear market, execution is the only narrative that carries any lasting weight. Promises are worthless. Roadmaps are just pictures. Only shipped products, signed partnerships, and growing user counts matter. Therefore, the pivotal questions for the Internet computer in 2026 are concrete and demanding. Can the DFINITY Foundation finally secure a major name-brand enterprise or institutional integration that serves as an undeniable proof of concept? Can the ecosystem developers and governance community finally establish those crucial, trust-minimized bridges and secure those essential stablecoin partnerships that connect ICP to the lifeblood of the crypto economy? This is the hard, unglamorous, absolutely critical work that needs to be executed now. While overall market sentiment is depressed, the noise is quieter, and distractions are fewer. This is the time for building, not boasting. So, where does this comprehensive analysis leave us with respect to the core 10x by April prediction? Based on the current technological, macroeconomic, and market trajectory, the likelihood of a genuine, sustained tenfold price surge in roughly a 2-month window appears extraordinarily remote, bordering on the fantastical. For such an event to materialize, it would require a perfect storm, a dramatic V-shaped reversal in the entire crypto market's fortune, coinciding with the overnight resolution of several of ICP's most persistent and structural challenges regarding interoperability and stablecoin integration. The probability of that specific alignment is infinitesimally small. Could we see a sharp technical relief rally that pushes ICP back to the $4 or $5 range? Absolutely. That is well within the realm of possibility during a short squeeze or a brief period of market-wide optimism. However, a sustained organic 10x move that would propel ICP toward $30 or higher. The current fundamentals, the tokenomics overhang, the competitive landscape, and most importantly, the hostile macro environment simply do not support that bullish thesis as we stand here today. My personal stance on ICP, therefore, remains cautiously neutral, but with a clear analytical framework. The underlying technology of the Internet computer is genuinely pioneering. The vision of a decentralized, sovereign cloud compute network is a powerful and compelling concept for the future of the web. However, it is imperative to remember that the ICP token is a separate financial entity from the network protocol itself. The token is not magically immune to the icy grips of a prolonged crypto winter. I am not a buyer of ICP at these price levels, as I see more compelling risk-reward opportunities elsewhere in the market. But I am absolutely watching with keen interest, monitoring closely for the first tangible, undeniable signs of true execution on the integration and adoption front, not just more promises or developer statistics. This year, 2026, will act as a powerful filter. It will ruthlessly separate the projects that are quietly, diligently building the foundational infrastructure for the next bull run from those that are still rhetorically fighting the last war. I sincerely want the internet computer to succeed and fulfill its ambitious vision. For that to happen, however, it needs to start playing a fundamentally different game, a game focused on connectivity, utility, and real-world use, not just technical benchmarks and online debates. Now, I want to turn this over to you, the ICP Today community. What is your informed take on this high-stakes situation? Do you believe Dominic Williams' 10x by April prediction carries any genuine merit based on the developer growth and upcoming tech, or do you view it as strategic hopium, necessary noise to maintain morale in a profoundly difficult down market? Do you think the lack of bridges and stablecoins is a fatal flaw or a solvable challenge? Let me know your detailed perspective, including your honest price target for mid-2026, in the comments section down below. The most insightful discussions happen there. If you find this deep dive into the future of decentralized technology valuable, support this channel. Make sure to hit that like button, subscribe to the channel, and turn on the bell icon so you don't miss future updates. Thanks for watching, and I'll see you in the next one.